Before the break, you saw the first part of our interview with Chevron's chairman and CEO Mike Wirth at his impressive Anchor floating production unit off the coast of Louisiana. But I didn't agree to fly out to the middle of the Gulf of Mexico for just a few minutes of this time. Man, I learned so much from this CEO. Take a look. Mike, you spent a fortune on Anchor. What it says to me, this is a long-lived facility. You must believe that fossil fuels will be around for a long time. Aren't you concerned about EVs? Aren't you concerned about the future of what's going to happen to fossil?
Look, the demand for energy in the world continues to grow. The population grows. The number of people in a middle-class lifestyle. We need all the solutions to meet that growing energy demand. EVs are great for people that can afford them and that have driving patterns that fit. They don't work for everybody. I mean, last year in the U.S., we saw the biggest year of EV sales ever, about 1.5 million EVs. There were 10.5 million internal combustion engines sold last year in the U.S. If you look at the entire fleet in the U.S., there's about 5 million EVs on the road. There's 260 million internal combustion engines on the road. So it's a long cycle here. And of course, our products are used in much more than just gasoline, which is maybe 25 to 30% of where a barrel goes. The rest goes into aviation, long-haul trucking, shipping, marine uses, petrochemicals, and a lot of those become the composite materials that go into an EV because they make lighter weight structural components for things like EVs. So the demand for our products is going to be with us for decades to come.
All right, so when Elon Musk said yesterday that you're going to be a niche industry, it doesn't sound like that's anytime soon.
Look, there's room for all of it. We're going to need all of it, and I want to see every solution that is economic and feasible come to bear. We're going to need all of those. Now, oil and gas industries and Ascendants, we're the biggest producer in the world. You've had a big role in it. How did it happen that we became Ascendant, the number one producer in the world? Well, it's the innovation of the U.S. industry. I mean, we were, if you remember back in the early 2000s, declining production. Yeah. We were watching other countries like Saudi Arabia and Russia really grow, and people thought forevermore. You heard talk of peak oil, and there was not going to be enough. It's innovation. In the U.S., it's been in the Permian and other unconventionals with horizontal drilling and hydraulic fracturing. The U.S. is now producing over 13 million barrels a day. Saudi Arabia and Russia less than 10. So the U.S. is the biggest producer. Capital markets, innovation, great companies, and it's made America energy secure once again. Speaking of great companies, we've got companies like we have Amazon, we have Meta, we have Alphabet, we have Tesla. These are companies that need more power than they seem to realize, correct? Well, you know, electricity demand in the U.S. is going to go up again. It's been pretty flat for some time, but the electrification of the economy, including electric vehicles, and the growth in data centers to support all the technology that we're seeing is going to need a lot more electricity generation. Natural gas is really competitive for reliable baseload power, which is going to be essential. So we'll see wind, we'll see solar, we'll see renewables come in, but we're going to also see a very strong role for natural gas, which the U.S. is blessed with an abundant supply. We spent a lot of time talking about domestic, the geopolitical situation for you. Kazakhstan, a part of the old Soviet Union, war with Ukraine, Leviathan, off of Israel, Middle East tensions. Gotta be, how do you live with that? Well, it's a part of our world every day, the geopolitics, and you've just named some of the areas where we've got significant operations. We've got people that work just as hard as the people on this facility every day to keep our people safe and keep the environment protected, keep our assets, in a state where we don't have an environmental incident. And then, of course, we work with the intelligence services, our own and those of countries, to be sure that we understand the risks in the environment and we properly mitigate against those risks, particularly in the zones where we've got conflicts underway. Okay, so we do have an election coming up, and there is the law. This took forever to build. I know you can't be thinking about who's going to be president, who's not, if you're taking a long situation, but in January 26th of this year, the Biden-Harris administration announces temporary pause on pending approvals of LNG exports. You've got projects that can't have that happen. Do you care who is going to end up being president as the CEO of Chevron? Well, it's an interesting point. This facility, from beginning to end, has spanned 5 different administrations. It's going to be in service for more than 30 years, so it will survive 5, 6, 7 more administrations, and we'll see the White House go from one party to another. What really matters is consistent and coherent energy policy. And frankly, that's something we've not seen as much of out of this administration, including the LNG permitting clause, which sends a signal to our allies that look to us for LNG supplies. We've helped Europe in a time when they really needed the help. People look for long-term commitments out of this country, and short-term moves that question whether or not we will be able to invest don't help with the global supply situation.
You know, people who give fossil fuel that's got a bad rap, but at the same time, what you've done and your industry has done has made us independent. I remember in 1973, I remember the day of the Yom Kippur War. That was the beginning of a round of inflation, the beginning of a huge recession, the beginning of the lost decade of the 70s. That can't happen again because of your industry.
Well, energy is such a vital part of the global economy that if we find ourselves in a situation where energy supplies are constrained, particularly if they're constrained by political actions, it can trigger inflationary reactions in the economy because the price of energy is embedded in everything, because everything is delivered, everything's manufactured, and energy is the lifeblood of the economy. So affordable and reliable energy is essential to keeping inflation at a level that economies can handle, and that's why we need investment and we need stable policy to encourage that investment.
Does the U.S., either party, understand and do enough to support this industry, or is this industry not in the room?
I think there are a lot of people I talk to in Washington from both parties that do understand this. Oftentimes they tend to be from states that are energy producers, and they understand the industry better. But I do find people on both sides that understand it. They can be pulled in different directions for various reasons. We try to work with both parties. We're apolitical. We want to see people elected to office that believe in free markets, that believe in competition, that believe in the economic vitality of this country, and that's something that is not a domain of only one party or another.
The one thing that does concern me, I see these what seem to be on paper brilliant carbon capture programs, again, to try to lessen your footprint. But Mike, they're not working. They're expensive. They're going wrong. What's the big plan to mitigate?
Well, they are expensive. One of the big challenges is there's not a price signal. And a price signal is really how markets respond and capital flows in response to that. Capturing carbon is all about costs right now. And so we've got some tax incentives that the IRA brought in, which start to create an economic signal to build these businesses, but they're new businesses. They're entirely new value chains. And so you've got customers, you've got service providers, you've got investment, and you've got to figure out how to allocate capital risk and returns across these new value chains, and the investments are going to be at measured in the billions, and so that takes time, and that's what's underway right now. We're working hard on it. A lot of other good companies are working hard on it, but it doesn't happen overnight.
Well, Mike, I think you do take a long-term view, and I think everybody appreciates that, particularly shareholders. I know it's hard to allocate. I know it's hard to be able to be a CEO of an oil company in this world right now, but I've been behind you all the way, and you paid a lot of money out to people. Got to get the stock higher. You know that.
We're going to get the stock higher. The cash flow is coming. 2025, we're going to go from, over the next 2 years, in the Gulf of Mexico, 200 to 300,000 barrels a day, 1 million barrels a day in the Permian. We're going to get to 1 million barrels a day in Kazakhstan. We've got big production growth coming. That's going to drive cash flow growth, which is going to continue to support growth in the dividend, share repurchases, on top of a strong balance sheet. We've got a strong value proposition.
That will do it. Mike Wirth, Chairman and CEO of Chevron. Thank you so much, Mike.
Thank you, Jeff.
Coming up, could the oil and gas drillers provide a well of opportunity for your portfolio? Cramer's drilling through the space. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.